The most bullish bank on Wall Street just doubled down on South Korea. JPMorgan now sees the Kospi index hitting 10,000 points in its bull case scenario. That's a 40% surge from current levels. And it's not hope, it's happening right now in the memory chip market. Here's what you need to know. JPMorgan Chase raised its price targets for South Korean equities for the second time in less than 30 days. The headline number, a bull case target of 10,000 for the Kospi index. We're talking about Asia's fourth largest economy potentially delivering blockbuster returns. Three forces are converging. First, the semiconductor memory cycle is turning sharply positive. Second, Korean corporate governance reforms are finally gaining traction after decades of investor complaints. Third, the country's industrial sector is expanding beyond most analyst expectations. This isn't a minor tweak. When a major bank revises targets twice in 4 weeks, they're seeing momentum accelerate faster than their own models predicted. Markets are responding. Korean stocks rallied on the news with semiconductor names leading the charge. Samsung Electronics and SK Hynix, the world's largest memory chip makers, are at the center of this story. Memory chip prices, which crashed through 2023, have reversed course. High bandwidth memory demand for artificial intelligence servers is exploding. The spot price for DDR5 chips is up 23% in 3 months. That directly hits Korean chip makers' bottom lines. The Korean won strengthened against the dollar as foreign capital flows return to Seoul. Bond markets are stable, which matters because Korea runs a current account surplus. Commodity demand is picking up, particularly for the industrial metals and chemicals Korea imports for manufacturing. Investor sentiment toward emerging Asian markets is shifting, and Korea is capturing an outsized share of inflows. The winners are obvious. Memory chip manufacturers are printing money again as AI infrastructure spending continues. Korean conglomerates like Samsung and Hyundai benefit from the governance reforms JPMorgan cited, which push for better shareholder returns and transparency. Korean battery makers supplying electric vehicles are seeing renewed optimism. Tech exporters gain as the electronics cycle recovers globally. The losers, competing chip makers in Taiwan and China, face tougher competitive pressure. Japanese electronics firms lose market share as Korean rivals regain pricing power. Countries dependent on electronics exports without Korea's memory chip dominance, like Malaysia and Vietnam, see relative disadvantage. Domestic Korean retailers and service companies could get overlooked as capital pours into exporters. This story hits hardest in Northeast Asia. South Korea obviously benefits directly. Taiwan watches nervously as TSMC's memory competitors gain ground. China needs memory chips but prefers domestic suppliers, creating geopolitical tension. Japan sees a rival resurgent in a sector it once dominated. The United States benefits indirectly as Korean chipmakers are major suppliers to American tech giants, and Samsung is building fabs in Texas. Europe, heavily dependent on Asian semiconductors for its auto industry, gains supply security but pays higher prices. Emerging markets see capital flow away from their stock markets toward Korea's suddenly hot story. The memory boom means hiring. Samsung and SK Hynix are expanding engineering teams and factory workforces. That puts upward pressure on wages in Suwon, Incheon, and other chip manufacturing hubs. Real estate in these cities is already rising. Seoul's commercial property market gains as corporate profits improve. But there's a catch. If the Kospi surges toward 10,000, Korean asset prices could overheat quickly, pricing younger Koreans out of home ownership just as job prospects brighten. Watch 3 things. First, February's earnings from Samsung and SK Hynix will confirm whether profit margins are truly recovering. Second, any shift in US-China tech tensions could choke off Korean chip exports overnight. Third, the Bank of Korea's next interest rate decision will signal whether they're worried about asset bubbles forming. Stay informed, stay ahead. This is World Financial News.